Good evening, everybody. Really excited to be back with another session of Endowus Live, a live webinar where we either introduce new wonderful solutions from Endowus or have educational sessions. Today is really exciting because we're introducing yet another new product from Endowus. It is the Cash Smart Ultra. Earn up to 2% per annum with the Cash Smart Ultra. It is the third installment of our Cash Smart product. I am Sam Ree, the Chief Investment Officer at Endowus, and together with me is Yulin. Say hi.
Hi guys, nice to be back. This is Yulin and I am the investment lead at Endowus.
Okay, great. And so we're going to go straight in our usual Slido poll. So Slido is a tool that we use to amalgamate the Q&A questions. And you have the ability to upvote or downvote. I don't think you can downvote, sorry. You have to upvote the questions that are most pertinent and you would like answered, and we will answer that immediately. And we'll also have a Slido poll going. So please go in there and check it out and participate in the poll as well. We have some disclaimers. As a licensed MAS company for financial advisory services, we need to provide these disclaimers. And just a quick shout out for next week's webinar. I can't believe that the first quarter is already gone. So we're already at the end of the first quarter and into second quarter now. So we'll be reviewing the portfolios, the various portfolios, advised portfolios that we have at Endowus. And really excited to introduce one of our newest members. The company and the team is growing still. But really excited to introduce Wei Mei, who has joined us as the head of investment advisory solutions at Endowus. Previously, she was at Deutsche Private Bank. She was the global co-head of investment and advisory solutions. And previous to that, she was also at Credit Suisse and UBS Private Bank, doing advisory solutions, but also the digital solutions there as well. And before that, she was at Temasek. So Wei Mei is a key part of the investment office, working together with myself and Yulin and also Kyungju. And the team is expanding, so we're really excited. And we'll do the portfolio review and returns analysis and also touch upon some market issues and address your questions next week. Oh, sorry, in our review next time. Just a quick intro on Endowus for those of you who do not know the company or are joining us for the first time. Endowus' mission, put very simply, is to help people invest better so they can live easier today and to live better tomorrow and through retirement. One of the reasons why we began the company is because of the problem that we faced in investing our own money and how broken the experience has been. It's amazing that this day and age we have amazing online and digital services. Everything's approachable and we can use our mobile apps for everything. But when it comes to wealth, there's still a very offline and tedious and a broken experience. And some of the biggest problems are the lack of aligned advice, the lack of great products. We know they're out there, but many retail individual investors do not have access to it. And just the overall exorbitant cost of investing and managing your money, all of which leads to poor outcomes. And so we have experienced this personally and have tried to create a solution through the platform that is Endowus, which is a digital but hyper-personalized and holistic platform. It gives us access to better financial products and solutions, and we lower cost at every layer possible, which leads to better outcomes. So we are a total wealth management platform for all of your wealth needs. We are the first and only digital advisor for CPF investing. And as a result, we're the only digital wealth platform where you can manage all of your source of funds here in Singapore, which is your cash savings, your CPF and SRS. We focus on a few things and really focus on doing those well. And this is why our clients choose us. We're independent, strictly fee only, which means that nobody else pays us other than our clients. We focus on giving you good advice, evidence-based and holistic and strategic and passive. We give you access to institutional funds and share classes that are exclusive, not available through other platforms. It means that cost is really, really low. and the lowest possible, but we also make it more efficient so that your currency is Sing dollars or Sing dollar hedged in the case of fixed income products, and tax efficient as well. And it's really for all of your wealth needs. So, it's a go-to wealth platform, a one-stop shop where you can manage your short-term liquidity through your Cash Smart and cash management accounts, so you can save better. Our core advised target risk portfolios for core, and recently we released excitingly our sustainable ESG portfolios so that you can invest better and also do good as well as do well. And you can build more flexibly on our platform through the FundSmart platform. And we have multiple model portfolios. We have curated best-in-class funds so that you can build with tools that do not exist elsewhere. So multiple portfolio tools that do not exist elsewhere that will help you and guide you along your investment journey. So Endowus is better, it's easier, it's cheaper. It's always on your side, trying to fight for fair fees and lowering fees, but also giving you better advice, independent, and really trying to meet the needs of our clients so that they can manage their wealth and live easier today and better tomorrow. So our Cash Smart platform has been really an exceptional and exciting platform. We launched it last year, middle of last year, and since then it's done tremendously well in both performance and delivering returns and yield for our clients when they needed it most. Last year during the COVID crisis, when interest rates had fallen so dramatically that we cannot get anything from anywhere, we launched Cash Smart to provide an option for our clients to manage their short-term liquidity, their emergency funds, and their cash. And unlike the banks or other platforms, we've been very transparent in building most suitable products for you. We launched Core and Enhanced previously, which were targeting close to 1% and close to 1.5%. These numbers are the most latest updated numbers, and they're net of all fees. So this is the actual yield and returns that is likely to be generated by you. And we'll go into more details later, and Yulin will explain how we've done even better than our expectations on those products. But today is really about Ultra because we want to provide, a higher yield product. Clients have asked us for, a little bit longer duration, but still very short-term cash-like, but also, a higher yield. And understanding that we are taking more risk in order to get that higher yield, but they wanted a specific product that is an extension of the Cash Smart. And we have answered that question and have met that need with a 2% targeting Cash Smart Ultra product. And I'll hand over to Yulin to go into a little bit more detail about the underlying funds and the portfolio characteristics. And we'll go back and forth on that, and I'll screen the questions. So please leave any questions you have on the Slido. Yulin, over to you.
Thanks, Sam, for the introduction. Yeah, so I will go into a bit more details on Cash Smart Ultra. Just alert that there will be a lot of charts and numbers, so it might be a bit boring, but bear with us because these are very important information for you to know. So as you can see on this slide, it shows you the underlying components of Cash Smart Ultra, and it uses slightly higher number of funds than the other two options. So we have 5 funds from 4 different managers. And the purpose behind it is because we really want to have more choice in different categories of funds. So we have a money market fund from LGI, LGI SGD Enhanced Liquidity Fund. And we have 2 short duration funds. Both are best in class, have done really well. One from Fullerton, one from Lion Global, and we also have the Nikko AM Shanta Income that has a slightly higher duration and also has a slightly different return driver. And we have the PIMCO Low Duration Income Fund. So these 5 funds, they are chosen by us to be best in class, and so that we can utilize them to target a higher yield within the defined risk range. And as you can see, on the fund level, the historical annual returns and the volatilities as shown by the standard deviation column are very different. So the funds, they do have exposure to different return drivers, and actually because of this, they offer diversification to each other. So we can optimize it on a portfolio level, so that as you can see, the portfolio level volatility is actually quite low at 0.65% over the past 2 years or so. And also the whole portfolio is designed being mindful of the duration risk and credit risk. So this portfolio has limited duration risk still. Of course, it takes a slightly higher duration risk, like compared to Cash Smart Enhanced, but it is still limited below 2 years. Yeah, so the next slide.
Yelena, let me just add one thing is that in order to build this portfolio, we looked at a very broad universe of all the duration funds that are available to us here in Singapore. We brought this PIMCO low duration income fund that was previously not available to us. We're accessing institutional share classes or offering 100% trailer fee rebate on many of these funds to get to a much lower net fee and also generate higher returns for you. But it really is about mixing these different funds, mix and matching them. And then, what we do is look at the covariance, which is how the different funds interact with each other in order to achieve a lower volatility and a higher yield for the client as a whole of the portfolio. So the multiple funds are needed to build a holistic portfolio that is lower volatility, that targets a low duration under 2 years. So we've achieved that, and yet generate returns that are quite attractive.
Yeah, that's exactly right. And actually on the fees, the next slide will show you clearly and transparently the exact amount of fees that you will be charged. So on each of the funds, we either get the institutional share class, just like Sam mentioned, on PIMCO low duration income fund. So as you can see, the fund level fee is 55 basis points, very low, and there's no trailer fee rebate because it's already the lowest that one can get on the market. And for the other funds, we rebate 100% trailer fee to get to the lowest net fee possible. And Endowus platform fee or access fee does exist for Cash Smart, but it is really low. It's only 5 basis points. And as a portfolio, the total cost, including the Endowus access fee, is only 38 basis points. So from a yield perspective, the net yield that one can achieve, as we mentioned, is in the range of 1.8 to 2%. And here the projected net yield is based on the yield to maturity number. So we always give a range with the lower bound and upper bound so that we can be prudent and conservative in our prediction, in our projection. And another very important information on this chart is the max drawdown number, as highlighted on the gray bar. And as you can see on the portfolio level, during March volatility last year, which was an extremely rare event, but it could happen, and it has happened in history, the Cash Smart Ultra portfolio, based on the live performance of each of the underlying funds, have gone, it did go down by 2.6%. And that is within the risk constraints that we have set out. So it did recover in about 3 months' time. And this is why we also mentioned previously that for, very conservatively, that Cash Smart Ultra is for your cash needs that's beyond 3 months. And the average credit rating is BBB as a blend of the underlying portfolios. So actually, Sam, can we go to the next slide? Yeah, so the next slide, it does a comparison of the historical performance and volatility standard deviation across the 3 portfolios. As you can see, on a both annualized basis and cumulative basis, Cash Smart Ultra has generated a higher return compared to Enhanced and Core. So it kind of goes in order of risk, right? So Core has the steadiest and lowest return, and Enhanced has an enhanced return, and Ultra has the highest return. And with regards to volatility, it also goes in order. So core only had volatility of like 11 basis points, which is really very, very low. Enhanced has 0.41% volatility, and Ultra has 0.65% volatility. So I think this is just something to take home, that higher risk also, higher yield also comes with higher risk and slightly higher volatility. And slide 15 again shows you the drawdown that has happened at the recovery period. I've briefly mentioned it before, but here is more details. That shows how transparent that we are. We always like to overload our clients with information, but yeah. So here you see that back again, it's the max drawdown. So basically, it's what's the worst outcome that has happened to the portfolio in the past. And the analysis started from the common inception of the underlying funds, which is 2018 December. And of course, actually the worst scenario would have happened in March 2020. But actually for Cash Smart Core, March 2020 was not a big shock to the portfolio. It barely went down, but it had a 1-day drawdown back in 2019 of 5 basis points, and it took about 6 days to recover. So it's the defensiveness of this portfolio is really quite impressive. And for Enhanced, it went down by about less than 1% back in March. It took about 15 days from peak to trough. So this 0.9% happened during the 15-day period. And then it took about 57 days to recover from the bottom. So for Ultra, it went down by 2.59%. It took about 18 days to go from peak to trough, and it took about 100 days to recover. So it does, again, go in order. But I guess it's really also it's also important to emphasize that overall the performance has been great for the Cash Smart portfolios, and Sam is going to kind of cover a bit more on that. So I'm going to hand over the time back to Sam.
Okay, great. And on this, I just want to point out that for the Cash Smart Core, that 2019 January slight decline one day, and many days when core, because of its lower yielding nature, it's actually flat. So it went down one day, was flat for 5 days, went back up. So basically, Cash Smart Core has not had a negative day in more than 2 years. So this is 2019. Cash Smart Enhanced and Ultra obviously has some short duration fixed income component, which means that they are exposed to duration risk, they're exposed to some credit risk. And as a result, what happens is that when interest rates especially rise, bond prices fall. Now, that's not always a realized loss. It is just a mark-to-market loss. So what that means is that it's just something that is priced as a loss, but they don't actually sell the bonds at that time to realize the loss. So as a fund with an NAV and a daily liquidity, the daily NAV is adjusted to represent that mark-to-market loss, but it's not something that is realized. So if you hold on to that fund, then eventually that will recover and go beyond and keep adding to the yield. And so that's the way you should look at these Cash Smart portfolios. Core is never, ever really going to fall for you, but it's low yielding because of that safe nature. Enhanced is going to be slightly negative in the worst case scenario. So this is March 2020 when COVID hit and global dislocations. Even the Fed had to intervene aggressively because people were selling US treasuries. That's how bad it was, because many emerging market countries did not have liquidity and they were short dollars. And the only way to fund dollars is to sell US treasury bonds, which is government bonds, which is the safest thing in the world. But they had to sell it. They were forced sellers. And as a result, yields spiked up. And so prices fell. And I think it's the same thing with Ultra. With a longer duration, that impact from a rising interest rate is even greater. So while it took us a little while for it to recover, this is not the norm. This is the absolute worst outcomes, but we are highlighting them to you to show the worst outlook, worst outcomes, and the possible risk that exists in these products. So this is not like your bank deposits, but bank deposits pay you nothing, 0.2%, 0.1%, or zero. These will give you 2% yield because you're taking a little bit more risk. But that risk in normal scenario is not meaningful and therefore will likely lead to very small losses. But even if you do create losses in the worst scenario, it will recover over time. So it's a matter of holding on, and how long that takes depends on the risk you're taking. So for Enhance, it takes less than 2 months. For Cash Smart Ultra, it's slightly more than 3 months. And that's why the guidance that we said at the beginning, that core is for really short-term liquidity, very safe. Enhance, if you invest for more than a month or two, it should always be positive. And then for Ultra, you really should be, if you're worried about downside risk, then it should be 3 months or more. And the long-term chart clearly shows how that growth of wealth for these Cash Smart portfolios have done. So this is since the launch of Cash Core and Cash Smart Enhanced. Ultra was obviously not there, but it just shows where what the portfolio would have done if we had owned it at that time. As you can see, Ultra recently in the rising interest rate environment has come off a little bit, but holding steady, and then hopefully it will be rising as interest rates continue to compound. And I wanted to share this table, which is in our Insights article. So we have just published the Cash Smart Ultra launch Insights article on our landing page website, but also that article also has an update on the March performance. And this is the actual performance of Cash Smart Core annual net returns versus the projected yield at the time of the launch of the product. So while Cash Smart Core is currently targeting 0.8 to 1, it used to be 1.1 to 1.3. Cash Smart Enhanced now is targeting 1.5, but at launch it was 2.2. But look at the results of the investment at that time. We have handily beat the performance, and it's been a very steady performance over that period of time. And as a result, I think that we can comfortably say that every projection, and the projections have changed at different periods of time, have done well. But I would highlight Cash Smart Ultra in February and March. So that unusual period occurred where we had flat or negative kind of returns, which were underperforming against the Cash Smart Enhanced. But we are thinking that that bout of underperformance has ended, and we think it's the right time to launch Cash Smart Ultra. And so we are here today as a result of that. So long end yield has been rising, has been creeping up due to reflation concerns. As you know, as the global economy returns to some form of normalcy and as vaccinations increase, there is a greater expectations of economic growth re-accelerating, which is the reflation trade, reflation of growth. But also as a result of higher growth, there are concerns that inflation may, run ahead of itself. It is our view that it's probably unlikely to happen, but it's not something that we can predict. The Fed has, the Federal Reserve in the United States, which is the central bank of the United States, have been talking about, the expectations that they have for inflation, and it's still manageable. So growth is something that is, coming back, but from a very low base. And also growth and the sustainability of that growth is questionable because we don't know how the economy will shape up as it, increases vaccination and returns to normalcy. So as long-term yields have crept up, especially the long end of the curve, bonds have underperformed and have seen negative returns. But on the short end, it's been relatively stable. So 6 months and 12 months have crept up very marginally in recent couple of months, not even, maybe a month. But during a period when the long-dated yields have actually gone up quite a lot. And the 2-year we have put in here so that we can compare with the duration, the average duration of these short duration funds. And we are under 2 years. So we're between the 12 months and the 2 years lines. And so this is an indication of how bonds would have performed. And this is an inverse chart of basically what the Cash Smart Ultra performance would have been like. So you would have, peaked in February when the yields bottomed. And then as yields crept up, we would have come off slightly. And this is exactly what the Cash Smart Ultra was expected to do. And it's exactly what it did. And so if you look at, how these portfolios do during periods of, crises, like in March of 2020, which is the earlier part of this chart, but also recently when interest rates rise, you can see that, Cash Smart Core has been very steady, even during March, even during the recent bout, it hasn't budged at all. And it's steadily creeped up at that, small pace that we expect it to do. Cash Smart Enhanced, because half of it is short duration, was heavily, impacted in March. And recently, it's really not been impacted much. It's come off a little bit, but hasn't been affected as much. But obviously, Cash Smart Ultra, with a higher proportion of short duration funds, has reacted much, much more. But these charts look like it's huge. But really, if you look at the numbers, it's 101 falling to 98 point something. That's 2 point something percent. And that's the worst outcome, 2.59% that we talked about. And recently, it's really only come off by a very small percentage, less than 1%. So you can see that. And this is, the charts to put that into context. Those same blue lines look like very small movements now. If you index it and compare it to the ultra defensive portfolio and also the 100% fixed income portfolio. So those portfolios are 100% fixed income. Ultra defensive sits between ultra and fixed income. It's not an advised portfolio. So when we launch it, just like Cash Smart Ultra, we will have to adjust it and update it. But it's a model portfolio that we created for investors that want something that's slightly more defensive than the 100% fixed income in scenarios where we feel that fixed income markets can be disrupted. And recently, again, just like in March, 100% fixed income fell slightly more, and the recovery since the low last month has been quite similar. So ultra defensive has done its job in being a bit more defensive than the 100% fixed income while generating a better recovery. But as you can see, the Cash Smart Core, Enhanced, and Ultra deviates very little and is much, much safer and less volatile than the ultra defensive portfolio. Yulin?
Thanks, Sam. Yeah, so I think the bottom line is that this is a short duration. Like the Cash Smart portfolios are short duration portfolios that take very limited duration risk. And short end interest rates, they are still crawling around historical lows. We did see some volatility recently. I think the market and the participants of the market were kind of uncertain about the near-term prospects of inflation. So there has been volatility, but the comfort is that Fed has made it clear that it will keep the rate low in the foreseeable future until there's more recovery coming up. And so investors can expect short-term and near-term volatility as the market keeps repricing the inflation. But at the same time, I think we should also not dismiss the recovery story. So actually the fixed income, the Cash Smart portfolios, they also have a decent exposure to credit, and credit is less anchored to rates. Rather, it's more on kind of the health of the economy and of the fundamentals of the companies. So we can expect that to improve going forward, and there is still upside there. And Cash Smart portfolios, again, they are designed with low duration to still be defensive in this environment. So I guess that's the comfort, and investors should embrace the volatility and understand the risk around it, and also the opportunities that's ahead. So like now bank is literally not paying anything. Current account interest rate is 5 basis point, and you can get maybe a slightly higher fixed rate if you do fixed deposit, but then your money is locked up and you can't take it out. So in this environment, if you put things into context, in our cash smart portfolios, they are still very attractive options for your short-term liquidity management needs. And it's liquid, it's completely liquid, and you take a slight risk to get that yield boost. So it's a trade-off, but it's a wise and calculated trade-off. And the next slide just shows you how transparently we provide yield updates. So if you are existing customers, you know that we have this chart on our website and we update it every month. And every month we also would write up portfolio reviews in the form of an insights article to see how the portfolio has done in the past and whether there has been any changes in its yield projection. So we have been doing it constantly, and we'll continue to do it to give you the comfort and to give you the transparency that you need. Sam, do you want to touch upon other options in the market?
Yeah, so I think that, there's no, I think the slide is not updated, but there's no need to go anywhere else is basically the message, because this is a range of digital solutions that exist out there, in the form of transparency. I think in the spirit of transparency, we wanted to show what we know of the allocations across the market. Some of the ones that are less, transparent and, not as attractive is stuff like Etika from Singtel Dash, which is an insurance linked product. And also something like Sing Life also has a, cash product as well. They're both yielding much less now, 1.8% for Etika, but that's only for your first $2,000. And same thing with Sing Life. It used to be 2%, but it's now down to 1.5. And all of these other guys, Saif began with 1.75 and advertised very aggressively, but now they're at 1.5. Stashaway is at 1.4. And Grab, I think, is at 1.1%, which is what they're revealing. What you can see is that all of them have very similar structures. And so, what we're trying to do is have different buckets of portfolios that would generate better outcomes for you. And so really we have 3 buckets now, which, meet all of our needs. The Cash Smart Enhanced actually is better than the other 3 higher yielding asset products that's available to them. I think that Stashaway and Saif may be limited by the single fund manager constraint that they have. As you know, we are multi-manager, and while we showed that with Core and Enhanced, we've kind of gone nuts with the Ultra by using multiple fund managers, Lion Global, Fullerton, Nikko Asset Management, and PIMCO. So we've used 4 different fund managers and 5 different products to generate a better yield. And, the regular updates that we provide on a monthly basis, we also adjust the yield quite regularly so that we're fully transparent. The other products out in the market, are not updated as regularly. And the other thing that we do is we provide a range so that it will be transparent and you'll know how to look at the different pockets. So, when you're investing your cash, I think it's really important to know how that affects your overall portfolio. If you have cash for your specific needs, then I think it's great, but don't hold too much cash if you don't have to own it, because as you know, the mantra, cash is trash. And there's a reason for that, because the cost of living in Singapore is rising constantly. It doesn't ever seem to be coming down, just like house prices, but also every other expenses is just inflationary. And when you hold too much cash, it gives you negative returns. And when you're investing in financial market, it drags your returns quite significantly. And so it's important, first of all, to have the right allocation of cash. And then the second thing is when you have some cash, make it work for you. Don't just put it into a bank deposit or get nothing from it. Invest it in the appropriate risk level of Cash Smart products so that you can generate at least some yield rather than negative yield. And it's important for you to bucket this into the different pools of money, different duration that you have, different needs and different goals, and look at it holistically from a perspective of all your source of funds, what's your CPF doing, what's your SRS doing, what's your cash savings doing, and manage that efficiently. So for those of you who are existing clients, and I have looked at the Slido and also the YouTube channels, I think there's a lot of questions about how we can effectively use, switch from existing core products and also switch from, the different Cash Smart solutions. So I'm going to share another screen with you so that I can show you transparently how we can, let me do a demo of the new Ultra product on the platform. Let me just close the presentation just for a little bit and move over to the demo. Okay, so this is the basic, this is not the one. This is the basic login page. So when you are an Endowus client, you can just log in with your account ID. So Sinting is our Chief Client Officer. And let's say we look at this Cash Smart enhanced product. We have a core product, we have an enhanced product. So for my enhanced or my core, I want to actually shift over to this new Ultra product. Very, very simple for you guys. You just go into the actual goal and then change this goal setting. So it's a modify goal. And so you press modify goal and immediately gives you a choice from Cash Smart enhanced. Where do you want to go? Is it core, enhanced, or ultra? So we choose the ultra, which gives you 1.28 to 2% projected yield. What it does, advice for cash needs for 3 months plus away for rare periods of negative performance, even though that this is rare. And most times it will generate relatively high yield for you. The underlying funds and their components, and then you press continue. And then immediately it will just show you all the details, the underlying fund level fees, the rebates that we provide to you, the Endowus access fee, which is 5 basis points, barely covers our cost. But we also want to provide the best solution for you. So that's why it's not 0. But even after all of that, the annual fee is very low. And most importantly, the projected fees are after all fees. So no hidden fees, no transaction fees, no cost, no sales charges, no nothing else other than the total fees that we've been transparently showing you. And even if you include all of those fees, that has been taken out already to give you the net yield of close to 2%. And the underlying components of those funds, what they do, if you want to know why we picked it, you can go into the fund rationale and then the underlying holdings. And all you have to do is an OTP on your SMS, and then you're on your way. And then for those that do not have any Cash Smart goal, you have to go through the add goal function, and you can choose between general investing or cash management and Fund Smart. So you choose the Cash Smart option and you continue. Ask what are the source of funds that you have. There was a question earlier about whether SRS is possible. Yes, it is. So you choose SRS as an option or cash as an option. And then obviously you press, say what the minimum investment is, and then ultra, and then that's maybe a little bit too much. Okay, 1,000. And then continue with the information that we have provided. And once again, you can name it whatever you want, ultra, and then continue. And then you will have, once again, more details and the underlying funds, what are the holdings, and then you confirm by SMS and you're done. So it's a really simple process for an existing client to, add a goal, or to modify your goal. So remember that modify your goal. Go to your existing Cash Smart core or enhanced portfolio. Go to the top right-hand side, click on the goal settings, and then change by modifying your goal. Now, for those of you who have never created an account, you just go to this create account. Obviously, when you first come on, this would be the right place. And you create an email address that you don't have before, and create a password, and you press create account, and immediately we'll go to sync pass, where you'll be able to download all your personal information seamlessly, even your CPF, OA, SAMA balance, your monthly income. If you're an accredited investor, you can click on your income. So your tax filings will be pulled, and we will immediately onboard you as an accredited investor. You don't have to send us any documentation. You don't have to do anything. It's all seamlessly done online. Only thing is, if you have CPF and SRS on, then obviously we will have to go through additional processes of CKA or SAQ and link your CPF account. But if you have an existing CPF or SRS account, you only need to input the account number and we'll be done. So very simple processes, and hopefully that's very clear. So I'm going to go back to the presentation again. Sorry, just one second. Anything you want to add, Yulin, while we wait for me to go back?
No, I just saw a really lovely comment from Slido. It's not a question, but it's from a client who says that, or maybe not a client, but this person says, I don't have a question, just wanted to say this session is great. Please continue doing this to help us understand how to invest better with you. So very heartwarming for me, at least.
Thank you so much for the encouragement, guys, and we really do appreciate it. And we are trying to not only solve for ourselves, but for all of our friends and family and loved ones, so that all of Singapore and later regionally, we can provide a service that we can be proud of, to also really serve you, to meet your needs, which is the most important thing that we can do.
Yeah.
There was some questions, but maybe I'll address the questions first. Well, anything that you see that we should be answering, Yulin?
There are some questions on the comparison of Cash Management Ultra and Cash Smart Ultra. So we did.
So we should answer that. Yeah.
Yeah.
Whenever we create a portfolio solution for our clients, we try to create the most optimized portfolio at the time of launch. So Cash Smart Ultra was created out of a need from clients for a higher yielding asset class. At the time, I think we, suggested that you use the Fullerton Short Interest Fund and, some other funds like Lion Global, etc. And we wanted to create a simplified version of it. So we only had 2 funds into it. But as we wanted to launch this, off the rack advised portfolio option, we got a lot of feedback from, our customers. And we also did a survey and, looked at, testing. And we really wanted to provide a solution that was differentiated and meets their needs, meets the investors' needs. And one of the features that we are introducing is the ability for us to constantly look at the market and see what's out there and create an ultra portfolio that will always be the highest yielding. So we're looking at the 5 funds that we have selected, but there are two or three other funds that are candidates for inclusion. And we've reviewed many others in the market. We've taken some off completely because we said they're not suitable for this. We have a few others that are candidates that we eventually didn't go into this initial portfolio, but we'll always look at the yields that each of the funds will generate, where they are in their cycle, and basically we'll optimize the portfolio to generate the highest yield. And so this Ultra is fundamentally a very different product from the Cash Management Ultra, which was a model portfolio that we suggested to investors to build on the FundSmart platform. Now you don't have to do it yourself. You can actually take that out and then put it into this Ultra so that we will manage, rebalance, and optimize so that you'll always be generating the highest yield. So we've taken that, hard work out for you to manage the Ultra going forward. So Right now, I don't think there is a way for us to shift directly as a modified goal. So I think you will have to redeem your Ultra and then invest into this new product as an advised portfolio. But if you have, as we showed, if you have a core or an enhanced, then you can actually do this by modifying your goal into the Ultra product.
Yeah, can I just add one point to it? I think, like Singaporean investors are quite yield hungry, and people tend to focus on the headline numbers, that's the yield number. But the reality is that with, exposure to short duration bond funds, there is not, the return comes from two components. One is the yield that the underlying portfolio generates, and and the other component is the capital appreciation. So short duration bond funds, they can generate additional return on top of just receiving the interest. And this is one of the reasons why you would have been seeing, different short duration bond funds outperforming the projected yield. So our enhanced portfolio has outperformed, and Ultra has would have been outperforming if we launched it earlier. And I think then the important thing is actually to choose the right funds and to choose the high quality and well managed funds. So we look at historical returns and risk management by the fund manager to make sure that it's really well managed and it's, it has a proven track record. We will talk to them and understand the entire process and philosophy to have the conviction. So it's beyond the headline numbers. It's a lot more work behind it to create this portfolio. And we hope that, this provides you a bit more comfort and understanding around this issue as well.
Okay, and there's some questions around, how to manage cash in the short term, and what's the appropriate product to use for these emergency funds in Cash Smart, say 9 months of wages. So I think that, everybody is different and everybody has different risk appetite. So go with something that is most comfortable for you. If it's a 9 month of wages, then I would, maybe split it between enhanced and ultra, because I think, the duration is such that you can take a little bit more risk. And so I think, core is a little bit too low for you. But if you, think that in that 9 months of wages, you're going to actually dip into that money at some point in time, then obviously you will have to have some in the Cash Smart core product so that you can dip into it. And I think another question that was asked had a really good, question about, whether we should use it as a savings account. And, if you say that, if you're implying that it's a savings account like the bank savings account, then I think, yes, I think it's very similar. I think there's very low risk of you ever really losing money. And also, we have daily liquidity. So you can redeem it any day. We have daily accrual of interest. So you're not losing interest, but it's accruing every day. And then there's no cost. So there's no transaction cost of putting money in or taking it out. There's no cost of, redeeming or subscribing to the funds. So it really is something that we have created to make your life easier, but also generate higher yield. Because savings accounts these days, you have to, cross multiple hurdles, like you have to use certain amount in credit cards and, have to have, certain amount in the deposit. You maybe need a mortgage to get that extra 10 beeps. And, it's just a painful and annoying thing to track all the time and have to worry. This just is such an easier way to generate 1% or more in terms of yield, and nothing that banks can offer that is, fixed deposits even that locks your money up can generate this kind of yield. So I think that, there is a reason why in developed markets, money market funds and cash funds and these kind of short duration cash management accounts have done so well and have grown rapidly to hundreds of billions of money of assets. And people use it very effectively to manage their short-term liquidity. Obviously, it's not as convenient as a bank ATM. It's not as convenient in terms of like taking the money out and it's in your bank account immediately, like a fast transfer. It does take a few days because it's in fund form. So bear with us, and we're trying to always improve our efficiency. But you should not be putting money in for 1 week and then taking it out, because the yield that you get from those few days is not really a lot. And there is risk if you go for the longer duration ones. So I would advise that you try to keep it in there for a longer period of time and find the most suitable product for that. It's not related to today, but Policy Woke, it's probably Jimmy asking the question, when will ESG investing be available as a vice portfolio using CPF? But the reason I'm going to answer that is because we have exciting news that very soon we will have ESG sustainable portfolios available as an advised portfolio for SRS. So SRS was not launched together at the beginning. So your ESG sustainable portfolios could only be available for cash. But very soon, because one of the funds were not available, but will be available as of today. And so if we can just fix our internal things, then we'll be able to launch SRS very soon. So look out for that. And please reach out to our support at endowus.com for any questions that you have related to the ESG portfolios. But unfortunately, PolicyWork guys, we are probably unlikely to launch CPF anytime soon. There are funds available in CPF. So just to let you know that there are the Schroders Sustainable Equity portfolio that's available. If you need Sharia compliant portfolio, we have a Temple Sharia fund that is ESG. And so those are available in CPF, but we're waiting for additional funds to come in so that we can basically create a diversified CPF ESG portfolio. So we'll make that happen, guys. We're really trying hard, and that's what we do. We do things that were not possible before. And so we want to make that happen for you. And so CPF ESG portfolios are coming, but really excited to launch SRS first very soon. Any other questions, Yulin, that you see that?
Yeah, there are two questions that I find interesting. Maybe you can try answer the first one. The first one is, how would you advise those 100% fixed income bond allocations? Looks like in a rising rates environment, bond prices will drop more. And there's another one on, can you give us a bit more details on the two new funds that we added to Cash Smart Ultra, PIMCO Low Duration Income, and Nikko AM Income Shanta Income? I can maybe briefly touch upon that.
Why don't you go first on that one, and then I'll answer the other interest rate question.
Sure. Yeah, so both funds are managed with low duration again. So PIMCO Low Duration Income Fund currently has less than 2 years duration, and Nikko AM has, I think, 2 to 3 years duration. And for PIMCO, it is basically the low duration version of its flagship PIMCO Income Fund. So you will see that it has a pretty significant allocation to US credit and mortgage, MBS, mortgage-backed securities. And this is why it's actually it's one of the most volatile funds in this portfolio. But it's done really well. It's the best performing funds out of the five portfolios. So it provides that yield boost, and it is diversifying to others. And for Nikko AM Shanta Income Fund, it is managed with the objective of generating 4% absolute return on a yearly basis. So it's managed with the absolute return objective. And in terms of its return driver exposure, it has about 30 to 40% exposure to Asian local currency bond. So it has basically that exposure, and it also, the rest of the exposure would be in either HGD credit or USD credit, and the portfolio manager has experience in both rates and currencies and credit and this is why the portfolio is managed this way. But actually, we do a fund rationale for all of the funds. So you will see in the fund rationale, the underlying allocation, the objective, and the selection criteria for each of the funds. So if you want structured, more detailed information, just go there and you will find it.
Yep. And also, there's a lot of new questions, and maybe people joined late. For those of you who joined late, I think that I can clarify that for those of you who have an existing Cash Smart core and enhanced product, you can switch to the Ultra easily. So modify your goal is the function that is on the top right-hand side of your portfolio. Change goal settings, and you click on modify goal, and it comes to this page, which gives you a choice between the three. So you can change from core to enhanced or core to ultra, ultra down to core or enhanced, etc. So modifying your goal is simple and seamless. Unfortunately, for those of you who have a cash management account ultra, which was a model portfolio where we suggested this allocation, as some of you have asked why, we've upgraded the ultra portfolio to include a broader suite of funds that are now available to us, and we've optimized the portfolio to give you a higher yield than what the previous ultra could achieve, and also reduce the volatility by diversifying the portfolio with multiple funds across multiple managers, across geography and also sector and duration. So that allows us to achieve a more optimized portfolio. And so for those of you who have an existing Cash Smart Ultra, cash management Ultra on Fund Smart, unfortunately, we are not able to make that seamless conversion as yet. So we apologize for that, guys. And you will have to redeem that and create a new goal, add goal function for existing clients, and choose the Ultra and transfer the funds into that. Obviously, when you do that, you're effectively doing what this modified goal is doing. It's just that you have to do 2 steps instead of 1 step. So we're doing the effectively same thing. If you have core, we sell it and then buy into Ultra. If you have a Cash Smart Ultra, cash management Ultra, we sell that and then buying into Ultra. So it's just the same process, but you have to do that twice instead of for this modified goal, you can do it once. So I'm sorry about the inconvenience that is caused, but it's part of the limitations of the current system. We are upgrading it. We're introducing soon into gold transfers as well. So we'll be able to do a lot more on our platform. As you know, it's a technology platform. So our engineers are hard at work, our product guys and our investment office work really hard to bring new solutions, as you can see, as soon as we can. But it takes, every line of code has to be written in order for this technology platform to be possible. So I hope that you can give us a little bit more patience and trust us to deliver for you and make these enhancements over time. And I think I'm a little bit surprised that people still don't know that we have a mobile app. So there was a question there as well. We have iOS, we have Android, we have a mobile app that's wonderful. And Ultra was launched together on the web app and the mobile app. So you have full access to that. So I'm going to address the question about interest rates, and maybe we need to wrap up after that. But basically, interest rates have been creeping up, as we said, and it's an inverse chart. So I explained this earlier for some people, but I think there's more concerns because interest rates keep creeping up. But you have to understand that interest rates and inflation does not move like suddenly overnight. This is a gradual process. And so we have some visibility. The second thing is that interest rates do not stand on an island by itself. Interest rates are a function, it's a cost of money. And that price is dictated by the Federal Reserve, which is the central bank, which not only dictates the price of money, which is interest rate, but the quantum of money in the way they print the fiat currency. And so basically, if you look at the short end, they've tied that down very, very strongly so that it doesn't rise that much. And they're buying back treasuries in order to achieve that. In the long end, obviously, it has crept up, and I don't think they mind the long end creeping up a little bit. The yield curve, as we call it, was too flat or inverted at a very short period of time. But having a steepening yield curve is natural, is normal. So we had an anomaly, but the long end is going up, and actually that's a normal good thing. And that's good for growth, and that's good for financial markets because it provides stability. It also allows banks to be profitable because they can have a spread on the interest, right? So I think all these things are things that the Federal Reserve and central banks manage very well. And I think that we're not likely to see a huge spike in interest rates from here. So with the stable interest rates, I think a lot of the volatility that we saw is largely over. And part of the reason that we're launching Cash Smart Ultra now is because that we feel that the timing is right, that the short-term volatility is over, and we think that this could be a good time to be launching this product. So with that, we're well over time again. We tried to keep it very brief, but we had wonderful, great questions from the audience. I hope that we answered most of it. If we haven't, then we apologize because of the time constraints. But as you can see underneath, you can see the support at endowus.com email. You can go to our landing page, endowus.com, and we have a wealth of information, insights article, we have the landing page information, all the historical performance data, and everything else that you need on the landing page. So please reach out to us or use the landing page website to get more information. And, thank you again for joining us for this long duration. And the last thing I will say is that, I forgot earlier, but this next webinar in Endowus Live is in 2 weeks' time. So there's no webinar next week, guys. Sorry about that. But we have one in 2 weeks' time where I will be joined by our senior advisor and head of advisor solutions, Wei Mei, who joins us with a wealth of experience. And we'll be reviewing the Endowus portfolio performance and returns and addressing market questions again. So please join us and ask more questions at that time. Thank you again to all of you. Thank you, Lynn. Any last words?
No, it's been a really great experience. And thank you so much for all of your time with us tonight as well.
Wonderful, guys. Thank you so much and have a wonderful evening and have a great week ahead.